Hey everyone. So today we'll start with this topic, sentiment analysis based trading strategy. In today's rapidly evolving financial markets, the integration of natural language processing with algorithmic trading has emerged like a revolutionary approach for gaining that competitive advantage. The fundamental premise of NLP trading lies in its ability to process and analyze vast quantities of unstructured textual data in real time. While human traders are limited by cognitive bandwidth, the systems can simultaneously process thousands of news articles, social media posts, and financial reports, and can give sophisticated trading signals. So, as for our problem statement is, it is to build a trading strategy that uses NLP to extract the information inside the news headlines, assigns the sentiment to that, and use the sentiments and the information inside the news headlines for a trading strategy. So, as part of the introduction, what is NLP trading? So, NLP is used to analyze text data from news, social media, and financial reports. It converts the qualitative information into quantitative trading signals, helps capture the market sentiments from textual data. And the reason why, as the market reacts to news and information, there can be some certain trading signals that can be captured by it. There's a vast amount of unstructured textual data available, like Twitter, news, and everywhere. So it's like an opportunity to gain competitive advantage to faster analysis and can process more information than human traders, obviously. So let's start with our approaches. So as for other data sources, we have the news headlines data and the stock prices data. As we are handling, this will be handled by the Yahoo Y Finance, and we have the headlines data that will be handled by our NLP model. So it has all the headlines from 2011 2018. It gets sourced from the RSS feeds. It contains a timestamp, which is very crucial for creating our time period for the selected stocks. And as usual, we have the stock price data of Google, Amazon, Facebook, and JP Morgan, Tesla. So as for our methods, we have implemented three distinct sentiment analysis methodologies. The first one is text blob implementation. It's utilizes pre-trend sentiment analysis, generates continuous sentiment scores ranging from -1 to 1, serves as our baseline model. Then we're moving to the LSTM. It implements the deep learning for sequential pattern recognition. It has the temporal dependencies in financial narratives, and we have achieved like up around 96.7 accuracy in sentiment classification. And the main part we are looking for is the VEDAR financial lexicon. It's a domain-specific sentiment analysis optimized for financial context, integration of market-specific modifiers and terminology like earning season adjustments, like the market timing considerations and the various specific companies factors. And it has the correlation with market returns also. So we will be going through our strategy rules. So the system operates on precise entry and strategy conditions. The entry triggers well, the sentiment delta exceeds zero point 0.5, and if the price momentum confirmation via 15-day moving average that we're calculating. And we have the standardized position sizing at around 100 shares. As for the exit conditions, if we have the negative sentiment shift below minus zero point 0.5, we will be exiting, and we will have the technical breakdown below the moving average, and we will have the complete position liquidation. Uh, as for the risk management, we have the fixed position sizing, and we are going with the initial capital of $100K. So as for the model performance, we have got the most with the LSTM, achieving 96.7 classification accuracy. Then we have the neural network, 93.8, and the traditional models with 85 to 89. And with the most return correlation that we've got, exceptional returns we have observed in Amazon, 42.1 return percentage. In Google, we have 15.0 and Netflix for 244.0. That is like amazing. So as for the technical significance, this implementation represents the significant advancement in quantitative trading by synthesizing multiple data sources, implementing sophisticated machine learning architectures, and demonstrating consistent profitability across various market conditions and validating the effectiveness through sentiment and trading strategies. So as you've got through the PPT, let's move on to the collab notebook that we have created as of now. So here we have defined the problem statement. So as start, we will load the Python packages. We have to add the additional packages. We have to get the NLTK, SPC, text blob, and everything. Now here we are loading the libraries. Here we are loading the stock price data, the Apple, Microsoft, Amazon. We are loading from the Y Finance data, and we have the CSV data loaded. As for the data preparation, we have to go with the loading and pre-processing of the news data and preparing the combined data. This step takes a long time, so we have to go with it as we have to load from the JSON file, and we have to we have to perform regex operation on it. Can so it can find the pattern in the raw messy text and perform actions accordingly. As you can see that as we're using the JSON parser, the news headlines are extracted from from the HTML format. This format is useful enough for the further analysis. So from this, we will extract the ticker and the headlines from the JSON files and put in the data frame. Let's look in the content of the data. As you can see, the ticker, we have the DVA, the Davita EPS beats by this headline. We've gotten then the date, and we have for the cognex, we have got this EPS like beats. As you can see, after combining all the data, we have the ticker, headlines, and the date. So we have to moving on to the feature engineering. We have to prepare the combined data. In this step, we are extracting the event return, which is the return that corresponds to the event. We do this because at times the news is reported late, and at other times it is reported after the market closes. Having a slight wider window captures the essence of the event. So we'll the return as like the t minus one, the t plus one, and the t, and we will return at the so we will return before the news data and on the day of the data. So we are loading on that and we are loading all the pre-processed data that we have done. So as part, we have got around like 2,759 rows of data with unique stock tickers. And then we'll move on to the evaluation of the models. So as we know, we're going with the text blob, the LSTM, and the financial lexicon. The As you can see, this is a text block that we have used. It is like a pre-trained model based on naive-Bayes classification to convert the sentence to numerical value of sentiment around -1 to 1 and map adjectives frequently in movie reviews like the sentiment polarity scores from -1 to plus, that is negative to positive. Is like to having a subjectivity score, like having whether it is objective or subjective. We are applying this on the headline article. So the polarity is between -1 and +1. There's negative and very positive. We apply on this all the headline of the data that we pre-processed in the previous step. And as you can see on the scatter plot, the correlation is positive, which means that the news with positive sentiments lead to positive return and it is expected. However, the correlation isn't very high. So as from this, we can also see the result that it is in a strong correlation between news and sentiment. There are also a lot of the sentiments around standard zero. So there, as you can see, the polarity is between 0.5. As for this, you can see the Bayer started week up to 74 share in Frankfurt, touching their highest level in 14 months. As you can see, it is a given a positive sentiment 0.5, but looking at the words, like the touching and not causes the positive sentiment, but it is not. So we are going with the LSTM model as of now. In this step, we developed the customized model for sentiment analysis based on the label data. The data has headlines for the news across 30 different stocks with total 9,470 rows, and the sentiments are between 0 and 1. The headlines are already most cleaned up as the previous step. We'll perform the classification steps. And in order to run the supervised model, we have to convert into feature representation. We have prepared the event variable and we have trained the classification model in a trained manner. We are running all the classification models as you can see, and we are having the algorithm. As you can see here, the NN model is the best performer with the training accuracy 99%, test accuracy 93. That is very good. The performance of the random forest, SVM, and the logistic are good as well. Cart and cane doesn't perform good as well, has the overfitting as well. So we are moving on the LSTM model. As above, we have used the model function. Now we're moving to the LSTM, the RNN, for the recurrent neural network that stores the information of current features for a longer set of time. We are just dividing the data into training and a test set. We are using the Keras library to build the neural network classifier. As you can see with the algorithm comparison from the previous and the new one that you've created, the LSTM. As you can see, it has given the best performance in the test set as compared to all the models as you've seen before. So now let's use an example of the LSTM and try to compute the sentiments in the data as we have. As you can see in this one, like the Whole Foods following the downgrade here. As you can see, we have given the correlation of 0.1. Yeah. So these are the supervised model, NNN models, deep learning models. Now we're going to unsupervised learning, model based on financial lexicons. So lexicons are special dictionaries or vocabularies that are used for analyzing the sentiments. This is the Veda, the Valence aware dictionary for sentiment reasoning. Like we have the domain specific knowledge, the specific contents that in the financial market. As we have loaded the lexicon data here, we are checking the data like the AAPL is trading higher and seeing the polarity scores of the particular data. As you can see, using this, we don't see as many returns for lower sentiments, but as the data may not be clear, let us look at one of the stock tickers. As you can see in this one, we see a positive correlation between the event return and sentiments. We'll look deeper into the comparison of different types of sentiments in the next section. We are going for the exploratory data analysis as this part. So we're looking at the sample headlines and the sentiments in the visualization. So as you can see, the ticker, we have the headline and we've got the sentiment analysis text blob and the sentiment of LSTM and the lexicon. As you can see, the LSTM is given 1 and the text blob is given around the negative range and the sentiment is given 0.8. Shares mostly gains here. So as you can see, LSTM is mostly accurate in this in such cases. It's positive. The sentiment is positive in this case. So as you can see, all the sentiments are positive relationship with the return, which is intuitive and expected. As for the Amazon, you can see the correlation for the LSTM has been the better and has been the better one. So the correlation from the lexicon methodology is highest among the higher stock tickers, which corroborates the conclusion from the previous analysis. Based on this, we can definitely see a positive relationship between the sentiments and the return. We use lexicon-based sentiments for the trading strategy in the next step. So as for this, we will be going through the strategy. As we know, our strategy, the entry and then exit parameter that we have to go through, like the sentiment delta exceeding 0.5 or the negative sentiment shifting below minus 0.5. We'll be calculating the momentum based on the 15-day moving averages and everything. And then we also have the standardized position sizing of 100 shares at least. Yeah. So here we're just setting up the strategy here using our API, the backtrader here. This is all, yeah. Then this is for the function for trading the trading strategy. Now we'll run a generating function to run the strategy for any stock. We specify the ticker and we're using the Yahoo Finance, where as said, we'll have the initial amount of $100K. And as said, the lot per trade is 100 stock. As you can see, we are running the results for it. As you can see, the top panel is the cash value observer, which the name implies keeps track of the cash and the total portfolio value. As we can see, we started with 100K and the final value we have amount this month that is very high. As for the second panel, we have the trade observer, which shows at the end of the trade that the actual profit and loss is defined as the opening position and taking the position back to zero and everything. The third panel is the buy sell observer, which plots where buy and sell operations have taken place. In general, we see that the buy action takes place when the stock price is increasing and the sell takes place when the stock price is declining. The bottom panel shows the sentiment score. Yeah. So clearly, as you can see, the news on the current day has positive sentiment as compared to the news on the previous day, causing the buy to be triggered. As for this current news, as you can see, and the previous news. So that's why, as for the positive sentiment, we have triggered the buy. Now we're checking for Facebook. As you can see, over profit of around 8,041. And there we're checking for the multiple stocks in here. Now we are choosing different time periods looking at the results. We first ran it through the time period between 2012 and 2014. As you can see for JP Morgan, Tesla, we have calculated the profit that we have got, the final portfolio value that we have got. Uh, so yeah, this is much of it. So as for the conclusion, we perform the comparison of the models and concluded that one of the most important step in the training of the model is the training it through domain specific vocabulary that we have got, like getting their financial terms correct. We further use the sentiments as signals to develop training different strategies, as is the exit and entry strategy that we've got. The initial results suggest that the model train of financial lexicon based could provide be a viable model for training strategy. Additional improvements can also be there, and we can have more existing NLP libraries for further pre-processing and coding steps to allow more focus on infrastructure. So that's it from my side. Thank you.